What's up, YouTube family? What it do? Welcome back to the Hive. All right, we with another episode of Market Talk, and this is for all my people who love financial literacy, who love the market, and just want to listen to somebody talk about it. So I'm here to fill that void for you guys. But without further ado, let's get right into it, my people. So as you can see, the whole market is red. I am on the Finviz website, and look at here, right here, the only thing that is green is the healthcare industry. All right, UNH was pretty green today, up 2.9%. All right, folks. Now, I did warn people about, this fall in particular right here. I said SPY is forming a rising wedge pattern, and if it breaks support, it could lead to a sizable drawdown. So if we go look at SPY has now broke support, right, of what? The rising wedge pattern. And I predicted it on what? December 10th. So you guys see that. And then look right here. You see right here, this is where it broke down. SPY broke down the rising wedge pattern. Predicted it on December 10th and on Stock Sundays, the last episode I did. You can look right here. For a break below that, super bull market we're in. But at the end of the day, the trigger's your friend. SPY breaks 602, could head down here, to the support line, next support line, which is roughly 597, 598. And then let's go to, so basically, I was talking about the rising wedge pattern. This on a 4-hour chart, but we're in this rising wedge looking pattern. All right. So I already gave people predictions on the rising wedge pattern. It has now broken the rising wedge pattern. Let me show you guys how to spot a rising wedge pattern. All right. So here's an example of how it looks. It looks like the opposite of but it's a reversal rising wedge. So it's like the opposite of a falling wedge, which is one of my favorite bullish patterns. But yes, we have came down, and I made some dough on it, on this down, but I should have made some more. I was out skiing as the market had fell. Right now I'm in Colorado. I'm also watching Nvidia for this particular head and shoulders pattern. So we're going to see about that. If it breaks 131.5, it should do its thing. Looks like it's trying to break, and Bitcoin is in this weird looking pattern right here. And it literally rejected the new high of like 108-ish, right? So I'll show you guys that as well. And then I'm going to tell you guys how we should moving forward, just letting you guys know this isn't BTC. We need to go to the BTC of Bitcoin stamp. There we go. Boom. So we see right here what I'm looking for on the crypto side is a break of support here. Kind of how you saw SPY break support. So this particular line, we're gonna make it red. We need crypto to break this line in order to get a sizable pullback, and it rejected highs here, so it's in this weird looking channel. And then SPY broke this rising wedge pattern. So, whether people want to admit it or not, crypto and the SPY market or the S&P, kind of move the same. Okay, so, and look, one thing I want to tell people as well is remember this and take this quote with you, all right? Remember, stocks take the staircase up and the elevator down. So notice how stocks will sharply move down. You see that? This is QQQ. You see that sharp down, but this slow up. So remember, we take the elevator down, the staircase up. See that? Staircase up, and then boom. Within like 2 weeks, almost 2.5 weeks, It took months to get here, and it wiped away nearly half in 2 weeks. And then look at this. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like 2 weeks to make this. And then one day, sizable drawdown. All right, and that's QQQ. And same with SPY. Took what? Nearly a whole month. We counted all these candles. Almost under a month in one day. All right, so remember that, folks. Now, personally, I'm going to show you guys the target for SPY. If it continues, we take this line right here, put it towards the breakout, stand it right up. It's saying it's coming to retest this 200 MA, people. That's what it's saying. It's saying SPY is coming here to 540. Right? So that's where it's saying SPY wants to go next. All right? And that's just next. And that would be what percentage drop from the most recent high? Right? That would be 11 points. So about a 12% drop. See that? 11.7. About a 12% drop from the highs. And then literally, if it continues even further down, by the way, that's the target, but believe it or not, the target is really the low of this particular. That's the first target. The second target would be this 511-ish. So this would be our first target, 540, second target, 511. And, about right here is where we're in bear market territory. So about right here is when we fall below this line right here, slightly below 494, we're potentially in bear market. So about 490. So 490 is when we reach bear market status. All right, folks, in the 490s. Now, this particular pattern could cause that. So, and that would be pretty cool, because I keep telling people, do not sleep on chart patterns. These things could really, make a move. So this is the opposite of a falling wedge. Like, what's one of the most recent falling wedges we've taken? I would have to go inside of my chat. But even right here, folks, I called SPY put leaps. I'm up 23% on these. I bought them at the highs, and I even gave them clear instructions on what to do. Right here, even bolted it, told them to add to their puts at 605, 610. And SPY 52-week high is 609. So, yep, you can add and all of that. I recommend, in my opinion, I can see two theories happening with this break of support. First theory is a retest of support and then drop. Well, I won't say it's my first theory. The first theory is a sharp decline, right? And of course, it won't move sharp all the way down. It'll do this, then this, then this, right? It'll do that, or a retest. So that's two theories we have, folks. A retest of support, if it does turn bullish, because people could still be betting bearish and it wants to fake these people out. The market loves to give and take. So I wouldn't be surprised if it comes up for a retest before falling, or it's going to fall straight down. But in my honest opinion, based on this pattern break, rising volume here, it's coming down to this 200 MA, whether it's retest or just come straight down, in my honest opinion. And the 200 MA is roughly in the 550, but remember, it moves every day because it's the 200 moving average. All right, folks. So let's talk about even more stuff, my people. So again, we can even talk about this. Kathy Wood just stated that she believes BTC has potential to 15x. I mean, people have been talking about it's going to 1 million. That's the new popular saying. So one day I do believe Bitcoin is going to 1 million. All right. So let's talk about it, folks. Starbucks workers are forming unions to strike. They want more benefits. Nissan and Honda want to merge. And then we could talk about this, the latest. All right. They cut it by 2 points. Oh, we're also going to talk about that as well, folks. We're going to talk about the rate cuts too. And I'm going to teach you guys about, what the rate cuts are about and why did we fall and this and that. All right. So let's get into that too. So first of all, Jerome Powell, FOMC, they had an FOMC meeting. And I want to talk to you guys about rate cuts. So today, we got the rates cut. What was it? All right, cut overnight borrowing rate to a target range of 2.5, 2.4 back to the level where it was December 2022, and rates were on the move higher. Okay, so let me explain to you what rate cuts mean. All right, so what does it mean when the Fed cuts interest rates? When the Fed cuts interest rates, they are lowering the Fed fund target rate. This is the rate banks charge each other when lending money overnight to meet the Federal Reserve requirement. This is important because a number of other interest rates utilize the target rates as reference points. One of the most significant rate influence is the prime rate, or the rate that banks charge their best customers. Why does the Fed cut rates? The Fed has a few tools at its disposal in order to enact monetary policy, open market operations, the buying and selling securities to increase or decrease money supply, discount rate, reserve requirements. But this is the part I really wanted to talk about. What are the potential impacts of the decision? So here are the positives impacts from lowering interest rates. Lower borrowing rates for both consumer and businesses. All right. So, that to me is a good thing, because you got to think, if they are lowering interest rates, then what does that mean? That means what, folks? That means that, people are going to spend more money. They're going to take more risks, things like that. This will incentivize consumers to spend and businesses to invest in projects, thus injecting capital into the economy. So the government is smart. They know that if they lower interest rates and all of that, right, then guess what? People are going to spend more. And they know that when they hike it, people spend less, correct? This infusion of capital will typically spur growth in the economy and the markets. So they're pretty much playing human society like a fiddle, if you really know what's going on, right? Even like during the coronavirus, I want to show you guys this chart too, the consumer price index. So you got to look at the overall interest rates and then the consumer price index, all right? And then notable negative impacts that occur. If rates are too low, they can spur excessive growth, which can lead to inflation and the loss of purchasing power. All right, folks. Low rates can lead investors to take on more risk than normal as they look for yield. Okay. And then retiree living off interest payments could look to cut spending to avoid tapping into principal. As baby boomers transition into retirement, a cut in spending along with an increased retiree population could have an impact on the overall economy. All right. So, there's positives and negatives, but basically they're going to keep boom, boom, boom based on where the economy is. Okay. If the economy, if it's too high, then they can hike the rates to make people stop spending. If they want people to slow down on the spending so the market can correct. You see what I'm saying? So I know what you guys are asking. Why would they do that? In my opinion, is to make the markets correct. Now, granted, raking hikes at all-time highs and it's still falling, or cutting interest rates and the market still falling is very interesting. But at the same time, one thing about the market, no matter what, folks, it's going to correct. So they're going to find reasons no matter what. And that's something I want people to understand about the market. It's just a cycle, you know? So right now we might be in a correctional period or the take profit period. You get what I'm saying? Because even I took a lot of profits on my option leaps up in this area. You feel me? and it's time to take even more, you know what I'm saying? Or hedge against your portfolio, especially with this down draw here, you know. That's my honest opinion. And yeah, folks, you know, that's pretty much all I got for today. It's just really breaking down interest rates to you guys. Oh, this too, Microsoft bought 485,000 Nvidia Hopper chips this year, according to that, and then Meta bought that. So they're making a lot of money off large companies. Their clientele are large companies. But the only thing that, you know, I have an issue with Nvidia is what I said here, you know, the AI industry, they're pretty much getting competition. People want to make their own chips. Now, granted, Nvidia has the best right now, but I just want to know how long will they dominate this market. And also, you know, I personally believe that it'll come a time. I'm still investing in Nvidia. Honestly, I made the most money ever off of this particular stock. That's my highest return. I think I made like 600K off this. So, I love Nvidia, but at the same time, maybe they're due for a correctional period. And I like to look at people's balance sheets as well. They've been doing pretty good. I want to show you guys their balance sheet. Let me pull it up and then I'm going to put it on the screen. Go to Yahoo Finance real quick. All right. So yeah, folks. Then we're gonna look at Tesla as well, because I saw Tesla had a sizable drop. Let's go look at that. Okay. About to retest all-time highs after breaking it. So do you buy this break and retest of all-time highs? Or what? But let's get back to Nvidia's balance sheet real quick. This is insane. I'm not even gonna lie to you guys. To go from, this is just year over year profitability, except for 2023 down year there, crazy year. In 2024, trailing 12 months, just insane, folks. $63 billion. They are increasing profitability each year, and revenue. Net and revenue is increasing year over year. Now, one thing I want to say, folks, is, whenever somebody is going up and up and up, this is why markets will always correct, because you got to think, Nvidia is climbing up. They have doubled, tripled, quadrupled their profits. Eventually, there has to be a plateau moment at the highest point. And what happens when that happens? A correction happens. Now, does Nvidia have the ability to stop the correction to where when they dip, and they dip hard enough for you and I to buy, and we can trust that this company will recover? Or will they just continue to have a downward slope from $100 billion? That's the only thing about buying stocks, after they have already made their sizable move. Kind of like how Tesla did, how it could stall out for a minute after doing this thing. Like Tesla had a run like Nvidia, right? I'm talking about a crazy run. And then they corrected and then stalled a little bit until they can get their stuff back right. But you have to stay patient during that stall moment. So Tesla did this too. And then they stalled a little bit and then boom, right? So that's another thing you guys need to know as well, is Nvidia could possibly get to a stalling point, during the next correctional period before it could continue to rise the way it did. It may go sideways before making its next leg up. But one thing we do know is, whatever plans they have in the future, whatever they got going on, we know that this company in particular has the ability to keep going. We do know that. All right, folks, stay prepared. hedge your portfolios. Nvidia looks like it has this head and shoulders pattern right here. So, make sure you guys stay alert about that. And yeah, it almost broke here, but then decided not to. So where's the neckline? We're going to say the neckline is, we're going to say it's here. I'm going to draw the neckline. All right. So yeah, Nvidia is not too late, and I project this bad boy to go from here. I've been telling people this though, but if it breaks down to the 200 MA, of course, 116 through about 114 ish, Nvidia could fall to. And anytime it's in this area, it's just a great buy to me. In the 90s, 100s, things like that, great area to buy. In that particular downsides would be about a 25% fall from the highs. And then if it gets back to the 90s, could be a 40%, 30% drawdown from the highs. All right, folks. I hope you guys learned a lot on this market talk. I don't want to be too long because I know you guys' time is valuable. I'm going to keep these 15 to 20 minutes long. All right, folks. Make sure you guys tap into my Discord. If you guys want all the plays that I get into, I'll pin the link in the description. You guys have a great day.